Okay, so this is the ES. Okay, if you don't have the Thinkorswim platform, you might have to check something else. Why I said Thinkorswim? Because they have um, lot of free tools to do your technical analysis. Okay, so in the Thinkorswim, so what you can do is your symbol is /CS. Symbol is /CS. Remember this one, /CS, then /NQ is for NASDAQ, and
So
/MES for micro, /MNQ for micro NQ. So because of the example, we are going to ES. So it is E mini S&P 500, and you have to understand 1 point is $50. When ES moves 1 point, you make $50. So if it is down 1 point, you lose $50. So that's the calculation. And before you start trading, so what I'm going to do is, first you to do is, so let me remove everything right now, right? So that I can show you from the scratch. That is for, okay. See, see, you can practice from anywhere, doesn't matter. I'm just giving you a starting point, okay? You can do explore and watch a lot of YouTube and something. You can make yourself better. You can be more better than me, much better than me. Okay, there is nothing wrong. I'm just giving you some ideas how you can make more out of your small investment. Okay, so and also this can, a lot of people do this one as a hedging. So on that you'll know later. But for now, let me show you. So if you have the kind of charting, you know how to get into the chart. So when you open your account, what you can do is you can go here. So you see monitor, trade, analyze, scan, market watch, charts. So you go here, charts here in the charts, and you see in the right side, there is something, this button, you can say detach. And when you say detach, you will open another session. You don't need to do detach if you are just doing here. Okay, because if you want a full screen, you can go detach and it will open a screen like this. Okay, then you can just, and here first time it is one screen. If you want two screens, you can have a two screens, three screens, four screens, like that. Okay, so it depends on what kind, how many screens you want. Right now I'm showing you in one screen. If you want more things, I can teach. I'm not going to teach whole TOS here, but I'm just showing you how you to set up. So once you have a TOS account and you can deposit $500, you'll get all live quotes. Okay, that is one thing. Second thing, your quotes are free. So basically you don't have to put any expiration symbol. That means I'm not going to put any H, M, U, J, something like that. I'm just putting /ES. That is the symbol. Okay, starting symbol. Okay, so /ES. Once you put the /ES symbol, you see this screen. Okay, now before that, okay, so let me remove everything. Okay, so now this is a blank screen. Okay, and so okay, so now I don't have any studies here. These are the default studies. There is no studies. Okay, so first study I'm going to add is, okay, into this one is MACD. If you don't know about MACD, I'm not going to teach on the MACD. I'll just give you the trick on that one. But if you want, you can join in my technical analysis class and for more information. But for this one, so I'm just adding MACD. MACD default value is 12, 26, 9. Okay, exponential. So apply. So I did that one. So that is the down. That is the down study, lower study. Okay. Now after I add this, I'm going to add another study. Go and say edit studies. Say simple moving average. Just type SIM. So you're going to get this. Say add. And here by default, you see moving average 9. Simple moving average is 9. So I go settings. Then I say 20. Okay. Then I'm going to do some settings here. I'm going to change this color to green. You can change whatever you want, but because I am just making it unique, I'm just width is 2, mean this is the line I want to see little bit thicker. Okay, you can also make it 3 or whatever, doesn't matter. So I'm good on this one. So SMA 20. Okay, then I'm going to add another one, the same simple moving average. Okay, no. So one simple moving average 20, another one is exponential. So that is a exponential moving average, which is moving average exponential and R select. Okay. So this is exponential. By default, it is 9. So now click on settings, then change it to 5. Then I'm also changing it to 2, and I'm changing it to yellow. Okay. So I got 2. Okay. I'm going to add one more. So moving average, same moving average exponential. I'm going to add one more. So it is 9. I'm going to change it to 10. And this time I'm going to change it to red. This one, I think that's fine. So I have simple moving average 20, exponential moving average 5, exponential moving average 10. Okay. And I have MACD. So these are the simple 4 things I need right now. Okay. And I click apply. So now everything is plotted here. Okay. Now, if you want to save this, so you can say right click, then say studies, then say save study set, and you can give a name. Okay. So like I have given you set for futures training, so I can say training. Okay. The tier 1. Okay. Because I'm doing in the training session, I just put a tier 1. So I saved it. So why did I save it? In case I need to open another chat window and I don't have to again type all this. So I just have to load the study sets. I go here and say load study set and load this training tier 1. So I don't have to do everything. So now all my things are set up here. Okay. So everybody understood? Okay. If you are following, write down, that's fine. It's for a quick note. Okay. Now let's go to the entry points. Okay. The simple entry points you are going to follow. Okay. Is so whenever 5 cross 20, the yellow line cross green line. Yellow line cross green line. Is that clear? Okay, look at this one. This is what time? It's a 8 a.m. morning. Okay. Morning 8 a.m. This didn't cross. It is just your candle, this candle closed below. This candle needs to close and this one need to cross. So 8 o'clock, you though it is closed, if you are a technically expert, if this kind of candle confirms a downtrend, right? It was already following a downtrend. Now you followed after market open. You see what happened. So market opened here. Market was indecisive, then finally it gave a red candle. So it is closing at this point. So closing was a red and closing was a strong candle. After that, the 5 crossed 20. The next candle, and if it opens, okay, you are going to take the trade here. You are not taking the trade here. Is that clear? You are not taking the trade here. Why are you taking? Because it has to cross. Okay. You will see here this one. If you see few minutes back, 1 hour back, and okay, this is a 1 hour chart, by the way. This is a 1 hour chart. You are not setting up 15 minutes, 13 minutes, 5 minutes. Okay. If you are trading, practicing, you have to practice this one. Okay. So now if you see here, mom, initially it was trying to come. You see here, it was trying to come here. It pulled down here. But what happened at the end? The yellow didn't close below. So that means there is no trade here. Now the same thing it tried again. It tried. Okay, you will thinking okay, it is going up, but now it didn't close. Also, it closed here. So that means yellow still remained above the 20. Okay, but the good part is if you know a lot of other technicals, you can also do this one because it hits the resistance 1, 2. It confirms a kind of when it this one you can take the short. But if you don't want to do all those, okay, just follow this trend. So now this closed. If you are still convinced, okay, market is closed, you can follow, you can ask, okay, can I take the trade? That's fine. But here, if you are confirming the yellow line crossing the green line confirms, then take the trade. And you are in the trading time zone. That means you are in the trading hours, 8 o'clock already. Trading hours is on. Now you take the trade and your stop loss should be at least somewhere at the top of this one. But generally we take stop loss around 5 points. But here you can survive till this point because you have to give some room, right? You can see here when you took the trade here, it came back to here. Almost it is touching your stop. If you touch the 5 points here, I don't know if the 5 points again. 47473. 4780, 7 points. That means if you are using 5 points, it already took your stop. Okay. But if you don't want to do this, then you just have to give little bit more points. So it may be 7 points, 8 points, 10 points. Okay. So that you're giving some room and to play around. Okay. So once you give, so if you ask me, you have to have a stop loss right above this resistance line. Okay. So, but that may 12, 13 points, but still you are in the kind of a profit. So now what happened after few 1 hour, 2 hours? Okay, what happened? You are a big winner, right? You sold at this point somewhere 4772, 8 o'clock, 9 o'clock, 10 o'clock, you have some profit. 11 o'clock, you have a big profit. And at this point, you can take the profit or you can move your stop loss to a profit level. Now next 12 o'clock, you have a more profit. Okay. Then it stayed because it's a big thing, right? Now, if you are still thinking, okay, it will go up, no. Okay. And when you are going to close, technically, if you want to follow, our closing point is whenever this yellow line, the 5 line closes the red line, that is EMA 20. So that means if the yellow line is crossing the 10, yellow line is crossing the 10, that is your closing. If you closed here, that's fine. If you're closed here, that's fine. But if you're suppose you have 5 contracts, after 5 contracts, you close 3 contracts, right? You closed 3 contracts and you have 2 contracts runner. You are still in the profit, but you are still seeing whether you have to close or not. Okay. If you have already, suppose your stop loss is here, if you see here, it already took it. But technically, if you want, you take as much as possible. Now it here, it has something, it is reversing right now. But if you want to still wait, and whenever this 5 cross 10, EMA 10, that is your red line. Simple thing is, yellow crosses red line, you exit. Yellow crosses green line, you enter. So this is one of the area. Do you get similar every time? You may not. Sometimes it may be something. What is it? It might be cheating you. It might be not a proper entry. Like look at here. It entered here. It crossed here. You made some money here, but all of a sudden immediately it goes and took out your stop. Okay, because it's trading above this one. But if you follow a little bit sometime, see here, actually that this one didn't cross anything. It still followed, but you are already out because the stop loss work. Stop loss is important. Okay, and this is not because after the whole big down, you will see a very confused market. Okay, so you have to be careful for this market. If it is not strong move, just play a little. Okay, and if you see here, okay, here is another one, right? Now look at here. So if you are trying to trade this one, you already saw 5 crosses 10 and give a big candle. Okay, and this will make you think, okay, to enter a negative point, like in shorting. So you are shorting here. So 5 crosses 20, sorry 10, then cross 20, at the next candle, right? So you take a candle here, start position here with a 10-point stop or something, because this kind of candle generally you should avoid. But if you have still kind of what you still want to take the chance and you want to put, okay, I want to exit because this confirm, because if you see here, it has already run a bit. Okay, now it is hit the resistance one time. If you see here, for me, it's a moderate position. Okay, so it create a moderate position, and here I can, whenever it did here, and you can easily have a short position here with stop loss here. Okay, but if you didn't do it and you saw a candle, and what time is this one? 7. It's after the market, right? So now you can wait, okay, then sort it here, or after the candle close. You have to wait till the candle close, whether it's a 7 o'clock, then it has to go to the 8 o'clock. So your positioning is 8 o'clock. So 8 o'clock, you can take, if you can take the position right here, shorting, okay? But if you are shorting here, suppose the moment immediately it went to here, what happened? It went up. So that means it might have taken the stop. But if you did not get this one immediately at this point, see the closing is 4784. After that, if you don't close 1 point below, don't enter into the trade. Don't enter into the trade. Okay. If you don't get the 1 point below the closing line. So if your candle is closed 4785, if you don't get the entry 4785 or 84, don't enter into the trade. Just keep the trade. But if you see and wait for this, if it comes back and it came back here, okay, it came back here 4785 or something, 87, take the trade. Okay. One candle, same candle if you get it. If you are getting in the next candle, it might be late, so I'll avoid it. But if you are brave enough to take it, that's fine with you, because I'm still following this one. This is very crucial. You don't want to take the trade here. What is the difference? 4785 to 4773. It's almost 10 points killer. Okay. 12 points killer. So if you trade 12 points below here, all of a sudden it goes up. You don't know whether it's going to come back. Okay. It came back, that's fine. But this is a wrong entry here. You have to wait. So when you see the big candle, if you can just enter 1 point below this candle closing, then take it, because this is your crossing. Okay. If you don't, then just keep the trade, wait for this one in the second candle. If it is coming third candle, avoid it. Okay. What will happen is third candle, fourth candle, boom. You see here, it did a reverse. Okay. Though it could not survive, but this will take your stops out. So that means you are a loser, right? Because stocks move very fast, and sometimes it will give you the, though it will say, okay, it went down, why it did so? Because this went up and came down. Okay. Now, maybe some other time here might be a right entry again. Okay. So entered here, then you made some profit. So our intention is to make 20, what? If you are trading micros, 5 points or 10.1 micro, 5 points. So maybe you can take 20, 25 points. So each trade you get 25 points. Okay. So based on that one, you are deciding. So 5 crosses 20, candle confirms, the trade confirms. Next candle you are entering, get out from the trade 5 or 6 points. Or if you want to move, just move your stop loss. Okay. Now same thing happened. So it moved up. Okay. Still you see here, it moved up. Did the yellow cross red? No, right? That means you are still on the trade. Isn't it nice trade? So it is still following this 10. Okay. Now slowly, if you still entered here, which I don't recommend, but if you want to still take the chances, you sell it here with a stop loss, you're still gainer, and still keep continuing, but it's still following within this range. So it didn't come down, it went up again. Okay. So you'll be thinking, okay, this one went up, I'll take the trade here. So what time it is on? Night 1 o'clock. Maybe you're not trading. Okay. So don't take the trade here. Now what's happening? Now 5 crosses 10. You are not in the trade. So what is the time right now here? 8 o'clock. I think we already discussed this one. So, okay. Now let's go to another point.
So RK, what is simple moving average? What we are looking this one, green one.
That's the reference, right? Mm.
Okay.
That's your reference signal. Simple averaging average gives you more weightage. Okay. Exponential moving average is more reacted to the price. Okay. So that's why you are not just exiting because EMA 20, because you are giving some time the stock price to more accurate to the move. So simple moving average, when it drops below 20, that confirms that stock is losing the strength.
Okay.
So whenever it crosses above the SMA 20, that means stock is gaining the strength. That is confirming. If you every time it will prove you. But 5 crosses 20 gives you the more kind of a thinking to trade. Okay, so this one is the same thing, I think. See, 5, 6, 7, 6 o'clock there is no movement, 7 o'clock no movement, 8 o'clock no movement. You are not taking trades here, right? So 10 o'clock no movement, 11 o'clock no movement. All of a sudden, but if you see at 10 o'clock, 11 o'clock, what happened? Something happened. So it is the and yellow crosses 10. That gives you, okay, this is a time for exit or time for the entry, another entry. So 12 o'clock, what happened? Some news or whatever, it crossed this one here, right? It closed at this point. So this is a very good candle. If your candle is strong, not enough, okay. If your entry is kind of a just a doji, you might be getting some kind of a, you might be cheated. Okay. So at that point, you have to think whether you have to take the trade or not. Okay. See, you need a strong candle like this or this. You don't think a candle like this or this or this. These are not some good candles. Okay. But these candles, I like this and this hammer, not this one. So, but here, if you see here, next same thing, if you are getting a 1 point entry here, you see here, if you got this one, 1 hour, 2 hours, it just thought in the something. After that, boom, by next session, you have a big profit and you should take this profit because you see your next candle, what happened? Boom, still under this one, but boom, it took some time. But if you already got your profit here, okay. Similar here, I think whenever these three crosses together, this is a mess up here. Okay, this is a mess up. Okay, so you may try to take some chances here, but it's kind of a mess up here. If you see here, it crossed 20, then boom, you made some money here, then it came down, again crossed 20 here, confirms here. The moment you take the trade, your stop loss is taken, again boom. So that means again you have to get another entry here because there is a big gap. If you see here, this was at the closing of the previous day, 13, right? So you don't know, you are out of the trade. Now next day opens, okay, at next session, it is jumped up. That's a gap up. If the gap up, this is a very good entry. Just take the trade, make some few points, wait for it, then it came down. Okay, then you have a nice 1 o'clock. I don't know, you are trading at 1 o'clock. 1 o'clock means it's 4 a.m. in the morning. You are not doing it. See here, 4 a.m. what happened? 1, 2, 3. The time the market started opening, okay, it's down again. Okay, so you cannot time these things. I think you are not awake at this time. You don't have to worry on this one. Again, you get ready for this kind of entry. So 4 o'clock you saw this one, 5 o'clock you saw this one, that is 8 o'clock Eastern. So this one, 1, 2, this confirms as what? Short entry, right? You can take a chances on this one because 4 o'clock, 5 o'clock, 6 o'clock definitely, because by the time you know the news and stuff, it's why it is going. So this might give you a nice profit here. Though it took out, your stop loss should be here. Just be patient. But I'll say wait till 1 hour after the trading opens so that you can get a nice profit. Okay, so what did you understand? So 5 crosses 20 is your entry, 5 crosses 10 is your exit. Simple formula. Trade on this one in each trading session. Okay, so what time will you trading? So if the trading opens at 6:30, 9:30 a.m., so you wait up to either 10 o'clock, at least give some 30 minutes gap, or 10:30, 1 hour gap. After that, take the trade. That's fasting in the morning session. Evening session after 8 p.m. EST. After 8 p.m. EST, don't take any trades before 8 p.m. EST. Is that clear? Okay. This is a simple formula, and whenever you are taking the trade, the reason I draw this MACD, if 5 is crossing 20, you look at this MACD, the blue line is crossing above the yellow line, right? So if that happens, that together confirms your entry point, take the trade. Okay. Suppose you're taking a trade here and MACD is not confirming, then don't take it. Just wait. Okay. So that is another. So 1, 2. These are the 2 confirmations. Take the trade, you will be profitable. As long as it is following, now you see here how nicely it is following this 20 average. If you just follow this one, and if you got the entry here, you can have 2, 3 entries, then just follow, keep it 1 or 2 contracts, just follow it. So see 1 or 2 trades, you will be definitely missing it because sometimes market will give you some bad entries. Okay. But if you just follow this one for some time, past 2, 3 trades past 10, 15 trades might be go wrong. Analyze it, why it went wrong, what you did, whether you opened it before that or after that. And if you analyze, then I think you will get it. Okay. Any questions on this one? You have to draw the chart in your trading platform. The same thing here. On the Tradovate also the same thing. You can have it. If you need some Tradovate idea how to draw it, you can ping me. I can help you. Okay. But it is the same thing here. If you see here, what is this one? ES. So right now ES is 50 point minus 0.50 down. Okay. So now it is still in the kind of it's not still coming up. Okay. So this is 1 hour. If you go to the 4 hours, it is still down. Okay. But there is a chance it may bounce tomorrow morning, but we are not sure. If you see the same thing in the NQ, it is still the big candle still dominating. So we are still not up. It's though only 29 points up. It's still not clear. If it goes above this 20 tomorrow morning, so you might see some strength. Okay. What if it does in the overnight, then it might fall. So you just have to wait right now because there are a big drop. 1 day, 2 day, big drops. So getting out of here is a little bit tricky. Okay. And if you see the 4 hours, I think this one was I was posting you guys. If you see here, there are 1, 2, 3, 4. There are 4 bouncing points. So it came down here, bounce from here, came down here, bounce from here, came down here, bounce from here. So the same thing it is doing here right now, coming down here, bouncing here. If it cannot survive this one, then you might see a biggest problem because it might come down to this point again. So another 100, 200, 100 points or something like that. No, not 100 points. This one will be another 200 points, okay, for Nasdaq. Okay. But we don't want that. But we are not there to decide. Powell is speaking tomorrow. So what will happen is, so market might go down again. Okay. I'm going to